Ever scroll through those Instagram ads? You know, the ones promising you'll be sipping champagne on a yacht, all thanks to real estate investing. It's like, is it really that easy?
Right.
Well, today we're diving deep into that world with Insource Funding. We're going to look at their unique approach, how it stacks up against traditional financing, and what it could mean for everyday investors like you and me.
And what's fascinating is that it's not like real estate investing is some new fad. It's been the cornerstone of wealth building for centuries, hasn't it?
Yeah, I mean, you always hear about how owning land is like a power move. But why is that? Why has land always been such a hot commodity?
Well, think about it. It's tangible. It's real. You can't exactly live in a stock certificate.
Right.
You know, real estate, it's a physical asset. It offers that sense of security, stability that a lot of people crave, especially in uncertain times. Like, remember the dot-com bubble?
No.
Tech stocks crashed and burned.
Totally.
But real estate, it held its ground. It was a safe haven.
So you're saying it's about having something solid, something tangible to show for your investment.
Exactly.
Now, Insource Funding talks about this trifecta of benefits for real estate investors.
Yeah.
Appreciation, passive income, and tax advantages.
Yeah.
Let's break those down one by one, starting with appreciation. So properties generally go up in value over time. But give me a real-world example. What does that actually look like?
Imagine like a bustling city center where everyone wants to live. More people means more demand for housing.
Right.
But the supply of land, it's limited.
It's not like they're making more of it.
Exactly. High demand, limited supply, what happens? Prices go up. That's appreciation in action.
It's like classic economics.
Exactly.
Okay, I'm with you. Now, what about this passive income thing? It sounds a bit like a myth. How does owning a property magically generate money without me having to, like, lift a finger?
It's not exactly magic, but it can feel like it. Think about rental properties. You buy a house, an apartment building, whatever. You find tenants, and they pay you rent. Boom. Passive income.
So it's like having
money working for you.
Money working for you while you're, I don't know, lounging on a beach.
Well, you might still have to, deal with the occasional leaky faucet, find new tenants, that kind of thing. But once it's up and running, it can generate income without you needing to be hands-on every day.
All right, that makes sense. Okay, last one, and maybe the most intimidating for some people. Tax advantages. Whenever I hear taxes, I think about money going out, not coming in.
I hear you.
Explain this one to me.
So the cool thing about owning real estate is you can often deduct certain expenses from your taxable income. Things like mortgage interest, property taxes.
So instead of that money going straight to the government, it reduces your overall tax burden.
Exactly. It's like a little financial incentive from Uncle Sam to encourage real estate investment.
Interesting. So it's like the government's giving you a little pat on the back for owning real estate.
You could say that.
Okay, so we've established that owning property has been a wealth-building tool for ages and comes with some pretty sweet perks. But let's be real. Actually getting started in real estate investing, it can be intimidating. That's where companies like Insource Funding come in, right?
Exactly. They aim to simplify that process, particularly when it comes to securing the funds to make those investments.
And from what I've seen, their whole approach seems pretty different from, like, your typical bank.
That's putting it mildly. To really grasp how different they are, we have to dig into the nitty-gritty of their loan options.
Okay, so let's dive into that.
So Insource Funding, they've got this range of loan options, each with its own kind of target audience,
Yeah, and their rental loan, it seems like that one's aimed at, like, the classic buy and hold investor.
Exactly. You buy a property, you find some good tenants, and then ideally you just kind of sit back and watch that passive income roll in.
Right. But we talked about this a bit earlier. What makes their rental loan different from what you'd find at a regular bank?
Well, a big part of it is the flexibility. They offer a 30-year fixed rate on those rental loans, which is that's huge for peace of mind, especially with interest rates being all over the place these days.
Yeah, totally. So you lock in that rate up front, and you don't have to worry about it suddenly jumping up and messing up your whole plan.
Exactly. And then there's the the income verification, or rather the lack thereof.
Right, that whole no income verification thing. To be honest, it almost sounds too good to be true.
It definitely turns the traditional lending model on its head. I mean, usually lenders want to see like a 5-year history of your income, tax returns, all that.
Yeah, they want to see every penny you've earned.
Right. But Insource Funding, they're doing things differently. Their focus is on the asset itself, the property.
So they're basically saying, we trust the bricks and mortar more than we trust your credit score.
That's a good way to put it. And for some investors, especially those who might have like irregular income or who are just starting out in real estate, this can be a real game changer.
It's like they're opening doors for people who might not fit the traditional borrower profile.
Exactly. They're lowering the barrier to entry, making real estate investing more accessible.
I like it. Okay, so that's rental loans. Now let's talk about their commercial loans. This sounds like we're moving into a whole other league here.
We are. Commercial loans, those are for those bigger investors who are looking at things like office buildings, shopping centers, those kinds of property.
Right, like the big leagues of real estate.
Precisely. These are significant investments. We're not talking about your average rental property here.
And what sets Insource Funding apart when it comes to these commercial loans?
Well, similar to their rental loans, they really emphasize speed and agility. They understand that in the business world, time is money, and a faster loan approval process, that can make all the difference.
So they're cutting through the red tape that you often find with like traditional commercial lending.
Exactly. They streamline the process, making it as efficient as possible for the borrower.
Okay, I can see how that would be a huge advantage. Right, now let's move on to bridge loans, because to be honest, I'm still a little fuzzy on those.
Okay, well, imagine this. You're an investor, and you find this amazing property. It's got tons of potential, but it needs work.
Like a fixer-upper, but on a bigger scale.
That's it. Or maybe you just need to close the deal really, really quickly before someone else swoops in. That's where a bridge loan comes in. It gives you that short-term financing you need, that bridge between buying the property and either renovating it or getting longer-term financing.
Ah, okay, so it's like a financial stopgap to get you to that next stage.
Precisely. It's a temporary solution, but it can be absolutely crucial in certain situations.
That makes a lot more sense.
Okay,
and finally, let's talk about their 50% LTV loan. This one really caught my eye because of that whole all credit accepted claim. That's pretty bold.
It is, and it definitely gets people's attention. But to really understand why it's such a big deal, we need to break down what LTV actually means.
Right. LTV, which stands for loan to value. So what does that mean in plain English?
Okay, so picture this. You've got your property, and let's say it's worth $500,000. With a 50% LTV loan, Insource Funding is saying, hey, we're willing to loan you up to 50% of that value, regardless of your credit score.
So even if my credit history isn't perfect, they might still be willing to loan me, what, like $250,000?
Yeah.
Just based on the value of the property.
That's exactly it. They're shifting the focus away from you as a borrower and putting it squarely on the asset itself. It's about the property's worth, not your creditworthiness.
That's pretty revolutionary in the lending world.
It is, and for a lot of people, that can be a real game changer.
I bet. It's like they're democratizing access to real estate investing.
That's a great way to put it. They're making it possible for more people to get involved in real estate, regardless of their background or their credit history.
I like it. Okay, but now we have to address the elephant in the room here.
No.
Leverage. It's a word that gets thrown around a lot in the real estate world, but it also comes with some risks.
You're absolutely right. Leverage is a powerful tool, but it's a double-edged sword.
So break it down for us. What is leverage and why is it so important in real estate?
Leverage is basically the ability to control a large asset, like a property, with a relatively small amount of your own money. It's like a financial seesaw.
Okay, I like that analogy.
Yeah.
So you put a little bit of money on one end of the seesaw, and that allows you to control something much bigger on the other end.
Exactly. And Insource Funding, they give a really clear example of how this can play out in real estate. Remember that investor we were talking about earlier, the one with the $400,000 property? Let's say they want to expand their portfolio, buy another property, but they don't want to sell their existing one.
Right. They want to hold on to that and let it appreciate.
Exactly. So instead of using their own cash for a down payment on a new property, they use their existing property as leverage. They take out a loan, maybe a 50% LTV loan from Insource Funding, and that gives them, say, $200,000 to use as a down payment on a new property.
So they've essentially doubled their assets without having to pull that $200,000 out of their own pocket. That's pretty incredible when you think about it.
It is, but here's the thing about leverage. While it can magnify your gains if the market is doing well, it can also amplify your losses if the market takes a downturn.
So it's not a guaranteed path to riches.
Not at all. It's essential to understand the risks involved and to make sure you're not over-leveraging yourself.
Right. You don't want to be caught in a situation where you owe more than the property is worth.
Exactly. So while leverage can be a fantastic tool for building wealth in real estate, it's crucial to approach it strategically and with a healthy dose of caution.
Absolutely. Don't put all your eggs in one basket, and make sure you understand the risks involved before you jump in head first. So we've talked about their loan options, the whole asset-based lending thing, and of course, the power and potential risks of leverage.
Right.
But there's this other thing about Insource Funding that we haven't really touched on yet. And it's more about their company culture, I guess you could say.
Right, yeah.
They really push this idea of being a partner to investors, not just a lender. Do you think there's something to that, or is it just like a marketing tactic?
You know, it's easy to be cynical when you hear stuff like that, but I actually think Insource Funding, they walk the walk. Okay. They seem to genuinely care about building those relationships and providing like real guidance throughout the whole investment journey.
So it's more than just, here's the money, see ya. They're actually invested in helping their borrowers succeed.
Exactly. And I think they understand that real estate investing can be, it can be a lot to handle, especially if you're new to it.
Yeah, it's not just about, buying low and selling high.
No, not at all.
There's a lot to learn, a lot of moving parts.
Exactly. So having that support system, that partner in your corner, it can make a huge difference. And then there's the whole closing process, which they claim takes 13 days or less.
Right. We touched on that earlier. In the real estate world, that sounds almost like impossible.
It does, doesn't it? I mean, everyone knows real estate deals, they can drag on forever.
Mountains of paperwork waiting for appraisals, it's a whole thing.
Exactly. But because Insource Funding, they're a private lender, they don't have all that bureaucracy slowing them down.
So they can move faster, be more efficient.
Precisely. And for investors, that speed and efficiency, it can be a major advantage.
It's the difference between like seizing an opportunity and missing out completely.
Exactly. So yeah, I think they're really onto something with that whole like partner-focused approach. But of course, even with all that said, it's always good to keep a level head.
Oh, absolutely. I mean, it all sounds really promising, but I'd be lying if I said there wasn't a part of me that's like, okay, what's the catch?
And that's a good instinct to have. Anytime something seems too good to be true, it's smart to really do your homework.
Right. Don't just take their word for it.
Exactly. So for our listeners out there, I think the takeaway here is this. Insource Funding, they're doing some really interesting things in the real estate space. They're challenging the status quo. They're making investing more accessible.
Yeah.
But like with any investment, you gotta do your due diligence, ask the tough questions, make sure it aligns with your goals and your risk tolerance.
Couldn't have said it better myself. Well, on that note, we'll leave you with this. If you could access capital based purely on the value of an asset, not your credit score, what opportunities would that open up for you? Something to think about. Thanks for joining us for this deep dive into the world of Insource Funding. Until next time, happy investing.